SBI on the Adani stock rout on the back of the Hindenburg report. The bank has said that SBI's exposure to Adani Group is well below the large exposure framework of the RBI. Ritu Singh gets us more on that. Ritu, over to you.
Well, that's right, Sonia. SBI, one of the largest lenders to Adani Group, has just told us, and I'm quoting this verbatim from the managing director in charge of corporate accounts at State Bank of India, who I just spoke with, who said, the group exposure of Adani Group is well within the large exposure framework limits, which is 25% of the bank's Tier 1 capital. Secondly, all of the exposure of SBI is secured by cash-generating assets, and any acquisitions that the Adani Group may have been making is largely from overseas market borrowing. So there is very little exposure as far as the Indian banks are concerned. Secondly, and more importantly, the bank highlighted that the Indian bank's exposure to Adani Group has been declining over the past 2 to 3 years, and that is a trend that we've been seeing as well. And at the same time, their debt to EBITDA has been improving as well, which improves their debt service obligations as well. As is known, there is the exposure build up to the Indian banking system on this account, therefore, has been low. SBI also in the meantime keeps reviewing the exposure to check whether there is the likelihood of any stress build-up over the next 12 months. And from those tests, SBI has been able to tell us that there is no concern on devolvement of Adani Group loans. And if any action is required, they will take time, measures from time to time to ensure that their exposure is safe. And as of now, no concern whatsoever on their exposure to the Adani Group.
All right, Ritu, thanks very much for that. That's an important story which we will continue to track. Gautam Dugad, of course, is still with us. Gautam,